Welcome out to Trade Masters, where two of us go head to head, bring you three picks every week, one directional, one theta, and a wild card round. And we try to make it a little entertaining as well. And this week, I think, is the first episode where it is student versus student. So forgive me for being a bit
Yes,
new for hosting. And we have Tom this
you did
week.
great. Hi, guys.
And would you like to go first, Tom?
Yeah, this week, by the way, shout out to Austin. Like he's been beating guys up constantly. So I try to be the lion to try to eat this gladiator if I could. So my first pick,
One more
to
thing
be
before we
honest,
get started. Remember, Matt and Mark and the whole gang is over on Discord. Keep being our little peanut gallery as well.
well, thanks. This week is a little bit tricky. Can you go with can you go it uh can you give us an overview first? I mean, Austin. This is what Tyler would do, right? Before the show starts, give us an overview on what's the market doing and stuff. Can you
Sure.
just a few minutes? Yeah.
So the S&P is up into this little resistance zone around 4150. Today, we held the 5, tested below, came back, closed above it. Yesterday, again, tested higher high, lower low. And we'll see what tomorrow brings. The NASDAQ came all the way down, tested the 9, and it's held. So far after hours, it's still holding the 9. We'll see how that goes. It is up into a new range. So you're up above the previous highs. So you're getting close to the August highs. Last time Powell came out and scared the market and sent it back down. And then the Russell, it's taken a beating thanks to the banks being a decent percentage of its holdings. So it's rolled over. Yeah, a bit of a swing high triggered today. And we'll see if this support level is going to hold or if something else will come out and send it lower or bring it back up.
Thanks, Austin. I love your charts. It's a little bit colorful, but I love it. As you have said, this week is a little bit choppy, and obviously the Bulls are fighting the Bears constantly, and I try to go a little bit conservative on my first pick, the directional pick. Normally we do three picks, right? First pick would be a directional pick, and the second pick would be a fader pick, like which would be we benefit from time decay, and the third one would be a wild card that everything goes and we go crazy with our strategies, our picks, and stuff like that. So my first one would be Pfizer. Please put up Pfizer, please.
Right up.
Um,
There you go.
yes. First, first of all, Pfizer is our Taco 25. If you do not have access to the Taco 25, you have to get your hands on. Is a list of stocks that Taco Trading put together, and it has great fundamentals, and I believe that we almost beat the market every single year with the list. But well, with this one, Pfizer, uh, with their banks collapsing, with everything's going on the market, I think uh, safety stocks would be a good pick for this week. So, but you can see heating up is yours is at the dailies. So we are hitting the 50 dailies at 41 80. Yeah, we're hitting up on that 50 daily, and we got 50s 50 sorry, the 9 weeklies that is at 41.82, but we do get 41.15 weeklies 200 that's going on there. So with the theme going on, I want to get involved with safety, which is healthcare, but I do have some concerns with that resistance. So what I would do is I would do a very, very conservative way, which is a cover call on Pfizer. So what I would do is I hit the trade tab. Yeah, you can add, yeah, similar to trade. Yeah, please. I'll go 44 days out. Then I would do the traditional way, which is 41 delta. So please, yeah, right click 42.5 and then buy cover stocks. Yes, cover stock in the middle. Yes. Analyze. So for those of you who are not familiar with cover stock, which did literally you buy a stock and then you sell a call against it. So it reduces your cost basis to 40/60. So this way you get your hands on a safety stock, but you do get close to 60 delta, which you do get directional exposure. So if it goes up above 42.50, your gain is capped, which is the distance between 41.55 and then 42.55, which is close to a buck. And then you get the credit. The credit is 90 something, right? The credit is 90.
Let's see, if you run all the way up to 42.50, your total gain would be
Yeah.
189. And
Yeah.
your credit just from the option, yes, $92.92 per share.
Yes. So if you're calculating the return of investment, you get a 4.68, 4.7 ROI. So you take 189 divided by 40, 40.61. Sorry, yeah, 189, 40.61. Yeah, 4.65. 40.61. Yeah, assuming you use all cash. Yeah. So this way, I want to participate in this space, but I get conservative, and then I want to be able to sleep at night. So this is my pick.
I like it.
Just one thing. If you want to go, if because prices, IV is quite low right now. Is in the 10, 12, 15 percentile. 18, yeah, it's in the 18 percentile. So, if $40,000 is a little bit much for you guys, you or it's too much exposure for your account, you can go with just a long call, June 16th. Pay you pay 126 for a 42.50 put, 42.50 call. That we do it as well. You get 43 delta, but instead is a negative theta trade, of course, but it's still a directional trade. So yeah, both we can do it. I've tried to build a bull call spread on this one, but the call is just too cheap. I can't make it work. So I think 126 long call, like 72 days. It's not too shabby, given that the theme is there. Or the if you have a long call, you can wait for a triggering signal, uh, like close about 42 or close about 41.80 to place it. But I think the market nowadays is really and really tricky. It's really get easy to get whipsaw. But yeah, that would do it as well if you have a small account or you want small exposure.
I like it. You've got some momentum building, a nice little moving average pinch forming. Get a push above 42. Easily make it to 43, 44. And if you get that far, if you get out before expiration, you're looking at $100 profit. If you hold that for, let's say, 2 weeks, 125, it could roll on to expiration to 190. With your bull call,
Yep.
you can make $108 2 weeks from now on one contract if it runs up to 43.80.
Yep.
And then if we drop intraday on the 15-minute, held that 50, a little bit of a pop and drop. On the hourly chart, you're still holding that 20 even after hours. And you're still above
Yeah, and
Monday's high as well.
yes, and don't forget we can roll it out. I mean, if the trend allows, and yeah, we can roll it out or roll it up and out, just in case the trend continues. And yeah, that's my pick.
Excellent. Let's see. Then yeah, I think that's all I have to add for Pfizer. I like it. See, my first pick is going to be a directional on FedEx.
Mm-hmm.
Let's see. So they just announced a cost cutting. I don't know about you, but I would love to reduce my personal spending by $4 billion. And I don't think there's a major stock that has been punished by investors for cutting costs. It worked out quite well for the energy stocks after oil showed us that commodity prices can not only go to zero, but go negative. Trimming the fat and oil companies set the stage for nice fast recoveries and excellent earnings soon after they got back to business. FedEx has been in a nice strong uptrend ever since the major gap down last year, where they pre-released some news a few days before their earnings report. And ever since right about here on the daily chart has been above the 5 and 9. The weekly chart has closed above the 5 EMA ever since early November. Then the daily, we had that big gap down here. Recovered the 5 and 9 here. And then there's been a few dips below right here and right here, but it's only been for a few days and it's gotten back up above that. The news for their cost cutting came out right here, gave you a nice little gap up. You do have a little bit overhead. So you have the 240 price level on the weekly chart. So the monthly, you have the 30 EMA above it. And I will gladly teach you everything you want to know about my charts, Matt. I did make my EMAs standard colors just to keep them readable. But so every $20 you end up with a price level resistance, but your only moving average resistance is this 30 monthly. So I decided to go with a bull call. Let's see. So I went with a June buy the 250. And sell the 260. There we go. Let's see. And that one will give you, if you have your stop loss set at 215, which is right here, you'll have your 200 weekly as support. And you have a nice little price level here as well on the daily chart. You have the 20 daily, the 30 daily, the 50 dailies coming up there, and that's if it breaks the 9 and 5 on top of a good news cost cutting theme. With 1 week of time decay, go out to April 12th. Set the profit 250. 215. So at 215, 1 week from now, stop loss, you'd risk $130 per contract. Your profit would be a potential 260. And that max loss would be just under 200. And your other option would be a 240, 250 for May. If you want to go a little more aggressive with a shorter term. Your profit would be 360 at $250 price level, and you're risking $200. So I like the risk reward ratio on the longer term one a little bit better, but May will get you into a positive theta position sooner.
Mm. Wow. I mean, I love it. You know, all the moving averages is in your favor. Either the dailies, yeah, the weeklies, the monthlies. It's all about it's all underneath the current price point, and it did go up to 320, yeah, 319 in 2021 when the COVID was still hiking a little bit by the time, the recovering theme again, I think by the time. So well, it's hard to argue with this trade. You mean, like the IV was 8% IV rank, and then your bull call is dirt cheap. Yeah, I love the longer term 193 with the risk reward to what, 1 to 5. You mean, like, it's amazing.
Yes. If you get
Yeah, I
out at
love it.
215, risk 130. And if you're shooting for 250, you'd make 250. So yeah, about
Yeah, I
2 to
mean,
1.
yeah, I mean, even if I don't have stop, I personally don't use stop loss at all. So I'm looking at, like, even if you want me to put up 193 to try to win $8, I mean, I'm good. the whole tray. I have 2 months to juggle along, you know. Yeah, I love it. Just that, like, because it gets a little bit choppy last time around, like in June to September. It had a hard time, like it burst through the 200 daily last time in July, but it came back down. I Yeah, it's the only thing that concerns me, that this time uh would not be the same. I mean, if it does, uh yeah, this is my only concern, was that was the July August choppiness. They can put some resistance on this tray. Otherwise, it is a very good tray, in my opinion.
Yeah, if it can crack 240 and get up above that level there, then it should be a nice little runner.
Yeah, yeah, and then it's just it comes back down to the 200 monthly, and then it drops in September.
Yeah, and then right,
What happened to FedEx in September? I forgot what
this
happened.
they
Yeah,
pre-released, so they had the earnings report, and a few days before that, they came out and gave bad news. And this was also back when the market was taking some good hits too.
yeah,
And ever since then, they've been taking actions to reduce their costs, reduce their overhead, streamline, get efficient, and they've been clawing their way right back up.
yeah. I mean, like, what, 63% rises in 190 days? That's crazy. Yeah, it's a pretty wild run.
Yep.
Yeah, man. Yeah, good pick, man.
Thank
I
you.
love it.
And I've been trying to find stuff that's past earnings, so you don't have to remember to look for it.
Yep. Especially for the Russian trade, right?
Yeah. What would you like on next, Tom?
Well, I would go with Bison favorite. Mm, well, it's as a faded trader, um, the IV rank. How come my IV rank is oh yeah, my IV rank is the same as yours. Yeah. Well, I as a communication defensive stocks, Verizon pays very good dividends. Is I think is in the dividend file works. Yeah, if I'm not mistaken. Um, yeah, it's a very solid stocks. I love it when it was $60. $60. Yeah. In last September, October, it was 60. So I still love it when it is 40. But of course, I would love to get it for a discount. So um, for me, um, as a fader trade, I would go with 40 days, which is a sweet spot. There are a few options that we can choose. So you want the stocks, you can go ahead and short the 40 put. But as I said, like, I mean, it's 40,000. It's a little bit too much exposure for some of the accounts out there. We can definitely go with 39. So 39 would be 36 delta, um, which give us uh, how 36 delta on the tray. Um, of course, if we just want the cash flow, 38, 26 delta, which go within our rules, about 25 delta. and we still get what, almost 2%, 1.6% on this cash flow play. One second. 60 divided by 38,000. Yeah, 1.5 percent return on margin. I mean on cash. On margin would be about 10%. Yeah, I mean, if given the current low volatility of the stock, if you can still get 10% return on the naked put, I think it's not too shabby. And 38 50 dailies, 9
You want the daily chart?
dailies, and yeah.
Okay.
And then you have a 20 daily that helps you out a little bit because the 20 daily is at 37.78. Yeah, but yes, 38 would be a reasonable target if it pulls back. I know 40 in these days, 44 days is a little bit far, but yeah, but if we're talking about Verizon, we're talking about a very defensive stocks. And so happen if you are put the stocks, they pay 6.5% in interest. So it's not too bad a stock as well. One thing to be concerned would be the earnings, which is coming up. What day is not showing on mine? Oops.
April 25th.
Yeah, April 25th. Yeah, that would be the only thing that is on your way. But since we are doing quite from a distance, so yeah, or else we can go a little bit shorter, picking up less credit, but we have more wiggle room to play with. So if we go to May 5th, which is 30 days, we can still pick up a nice $48. Yeah, $48. It's still a good 1% return on the cash secure put. If we do, but we will get a lot more wiggle room with a shorter period of time. Yeah, it's basically just a stock that I like, and then I would love to get involved with. Yeah, that's my pick.
I like it. Yeah, just be mindful of your 200 daily right there. Might be a good time
Yep.
to lock in profit. You have some earnings coming up. Let me see. It's about the same level as your 50 weekly.
Yeah, 40, 41.
And you have a
The
little
9
bit of
monthly would be 40.95, 40.98.
a price level here at 42 also from years past. But yeah,
Yep.
it's definitely Verizon's not going anywhere anytime soon. So make
Yep.
some money on that guy.
I know it's not the best time to have a naked put on Verizon, but yeah, I mean, I just love the stocks.
That's a good one. It's got a healthy dividend too. Just like you mentioned,
Yeah,
6.5% here.
yeah, and PE is at 7.9. I mean, you know, it's it's a good time to pick up some good company, in my opinion. And the PB ratio is actually less than 2. It's about 1.8 right now. So you're literally paying $1.8 per one asset that it owns. So it's not the best deal on earth, but it's a pretty good deal, I would say.
Very nice.
So what's yours?
I decided to go with Adobe for my theta pick.
Mm-hmm.
Let's see. So between December 2018 and today, who do you think has missed more earnings reports, Microsoft, Apple, or Adobe? And surprisingly, Adobe's missed the least. They've had no misses since the end of 2018.
Oh,
Microsoft has
wow.
one. It was a small miss. Apple had two small misses, but still slight misses. So Adobe's become pretty good at the earnings game. I had to go back
Mm-hmm.
before December 2018 to start finding misses or very small beats. Recently, they have not run as far as the popular tech names. So if they get hit with a sell-off, it should be smaller compared to another stock I was thinking about today was CRM. But CRM's had a
Mm,
nice run, so if they get hit, they could get hit a bit harder. Adobe does have a weekly double top forming right here, but it has come off a nice support level at 325, and even the banking crisis couldn't break that. It was closed above the 5 daily every day as of March 15th. It was right here. Banking crisis right in here. I don't think Adobe is going to play Rocket Man anytime soon. I also don't think it's going to be a cliff diver either. Future price action may be a bit choppy with the weekly and monthly moving averages overhead. You have a 200 weekly there at 425. You have a 100 weekly up there in the 460 range. You have a 20 monthly right at 400, along with some previous price action in that 400 range as well. You have your 30 monthly up here in the 465 range. And you even have a quarterly 9 sitting up there just under 400. So I found a 13 delta bull put spread that'll give you 10%. And also, we are past earnings. And with the May 335, 330. Didn't have my stop loss mapped out yet. So you'd be selling your short strike right down here. A bit of room on the weekly chart. Almost all your weekly moving averages are in between your short strike and the current price. All of your daily moving averages are there helping you as well. So if you want to pick 340 as a stop loss, you'd still be in the theta positive. And even if you bring it all the way down to 330, at the end of April, we'll give it 4 weeks. First week of May at 330, you risk $200. to make 64 on the theta trade for one contract, and that gives you right around 10% with a 5-point spread. And if you're on a margin account or portfolio margin account, then your ROI will be even higher. But then you don't care if it's choppy as it's navigating all these longer moving averages and previous price levels. You're just hoping it doesn't fall down and die. Then you also have your weekly MACD, giving you a little bit of momentum there. But yeah, that's about all I had for Adobe.
Well, I mean, can't argue. I mean, all the moving averages as support. The wow. I mean, is actually is pretty clean, I would say. Especially when we're doing a bull put, we only require that it does not go down too far. I mean, we are not asking for too much, but it yeah, before earnings it did hit 320, but after earnings it went up, and the IV picks up a little bit. Yeah. So you are doing the 335 and the 330, right?
Yeah.
Yeah. Don't have much to complain. I mean, it fits all the, it checked all the boxes, you know. Good pick. I mean, I like it, and yeah, it the only thing would be the ATR is 8.9, can come down pretty fast in a short period of time. Sorry, how many days out? How many days out? 30 days? Did you do?
44 days.
44 days. Okay. Yeah. The only thing that concerns me would be in 44 days, this thing can move really, really fast. And yeah, but I don't much concerns on the theme. It yeah, it even banks doesn't. I think the only theme that that could breaks the Adobe trend would be would be the sell off to tax. Would that be the only concern?
Yeah, it'd be Microsoft, Apple, all the big boys would be getting hit
Yeah,
if something's going to slaughter Adobe.
yeah. But yeah, I mean, apart from that, this is a very solid trade, I would say. I love it. So who got round one, Austin?
Give me just a second and I will let you know. In the meantime, what would you like the next chart to be?
Well, for the third one, for the wild card, I I have a very split personality on this thing. um, for the sake of wild card, I would like to go with Tesla, but at the same time, I will also I'll go pitch Tesla first, all right, and then I'll pitch another one that I believe would be beneficial to the folks. So for Tesla, it has an ugly daily chart. Okay, it just broke the 50 dailies, and then it sort of broke the 20 dailies. But thanks to that, the IV rank picks up quite a bit, at 27 right now. And if you go to the weekly charts, weeklies, yes, you can see that there are quite a bit of weekly support that's coming up. You have the 9 weeklies at 187, which is right about uh, the price right now, and then you have the 200 weeklies at 176, and then you have the 20 weeklies at 171. So so in the past year, Tesla's 200 weeklies has been holding up quite well. So if I love this company, and then if I want to get juicy premium, I could play this. So if I go trade tab, by the way, as far as I'm concerned, the recent drop was because of the news that it has 30,000 cars that has to be called back because of the full auto driving system, stuff like that. Yeah, I don't really care. Instead, I mean to be frank, because I have a feeling that like Elon Musk just wants it sometimes in order for him to buy some more or to sell some more. I don't know, but as a trader, I want to benefit from the news a little bit. So if you go really out, let's say May 19th, you can pick up you can sell 140. Sell 140. You get a very sizable credit, 237. What is the ROI on that? Yeah, you get 1.7 percent. And if you do it on margin, you get 8% on the return. But you are talking about another like 20% drop in Tesla. I know the Tesla coming from 100, okay, in the beginning of the year, so everything could happen here. But I think Tesla is not going away soon, I would say. So on the other hand, I mean, if Tesla itself is a little bit too pricey for you, we can play the TSLL, which is the leverage ETF to long Tesla. So it's $10. So we can go. Actually, you know what? If we play this TSLL, we can go shorter, April 21st, $9, or even $8.5, 8.5. If you can get fill, you can get what, $15, 10 or $15. It's still a 10% return on your margin, and 1% return on your on cash. So or that yours is a portfolio margin. That's because yeah, if you do just regular margin, it's almost the same as the TSLA. Yeah, thanks. Yeah, 8.5. So if you want a little bit more credit, you can go with 9. If you sell a if you sell at 9 April 21st, 16 days out, you get $25 if you can get fill, divided by 897, you get a 2.8% return. Well, because I think TSLL is a leverage ETF. The broker doesn't give you much margin on it, but still, it's a very cheap stocks you can play with. Yeah, this is my wild card that if you want to get in touch with Tesla, and yeah, this is my wild card. I will pitch another one, but I'll let you finish your pick first.
Let's see, my wild card, I'm gonna steal from Mark, and it's a bond play off of TLT, or if you
Yeah,
want to go with a
I mean, two Vikings here. We have to talk about the bonds.
That's right. So I went really long term here because it may not go to the moon soon. It's going to require the Fed to change their outlook and a whole bunch of other stuff. But if it does decide to run, I think it could get up to this $150 area pre-COVID without too much work. So we're going to jump into the Wayback Machine and go into the future to next February. Let's see if I have my notes here. No, I don't. Okay, I have to build this on the fly again. All right, so I went with a 140, 150.
So you have to short the
There we go.
150.
So max risk, 55 bucks, no stop loss. If this thing makes a move by August 1st and hits 150, you have about a 10-to-1 risk reward.
Wow.
And if you run it to expiration, which is February, which is another 6 months after that, you're looking at close to a 20-to-1 if it hangs around 150. You can also build a closer to the money, same expiration, 4150. I went with a if you go with one that costs you twice as much money, the risk reward's not quite as good, but you get into a theta positive position a lot sooner at 135 instead of 145. So it's a little
What
bit
is the
more
max
of
reward?
max reward on the
945.
cheaper one is
Oh yeah.
945. Max reward on the more
Yeah.
expensive one is only around 900 bucks. So going a little further out, better risk reward. And this is another one of those just cheap plays, throw 50 bucks at it, see if something happens or not. Not necessarily a
Wow.
big position trade or anything like that, but just something you can leave in the back and then wait and see what the Fed does.
Wow. I mean, like, even though I'm allergic to debit trades, it gets me interested, like especially the long duration, the leap. We had 300 days for it to work out, and given the current theme towards bonds, I mean, ooh, it's nice. It's yeah, it's I would say it's wildly conservative, and it's conservatively wild. Man, I love
Yeah,
it. I want to throw in another one.
sure.
For some of you like me, I mean, if you're if you have a bunch of stocks that is still smiling at you and you don't want to give it up, or it's under your the current price is under your cost basis, um I want to pitch SPXU, um which is the inverse ETF of the SPY of the S&P. uh is a short-term play, but it gives you a little bit of hedges um, for the period of time. Right now, the S&P is at its recent height, like close to 4,000, 42, 4,100. So you can see that the SPXU is really low. What I would do is I could put a naked put underneath 44 days out. I know the IV is not too good. It's at 1%. So there are 2 days. There are two ways to do it. So, sorry, 1 second. Yeah. You can just go long the stocks to play as a hedge at 13.74, or you can place a $13 naked put. So it would be it would gives you fader decay, and then it gives you 33 deltas of inverse ETF. So it reduces the volatility that is happening to your account every night when the market drops, or if we are anticipating a bigger drops in the coming weeks or months. I always love fader hatches because it gives me peace, I would say. Yes. When the bank collapsed, yeah, it hit the recent 200 dailies. Yeah, but it drops back down. The market seems to have no fear. Seems to have no fear. Yeah, but honestly, I don't see any positive theme is going on the market. So just a way to reduce volatility, to reduce stress to your account. If you have a little bit, not a little bit, like if you have quite a little bit of exposure, especially on stocks.
It's good to have something that makes money when somebody throws something at that fan.
Yes, yes, yes. Agree.
I
Well,
think
we're
Tom
having a
deserves
tie.
some. Yeah, we're all tied up. Final round 50-50, second round 60-40, and the first round was super close, 56-43. So it looks
Well,
like we're both back next week.
well,
I have a feeling Matt
I'm.
is cooking the books over there so they can get some time off.
Oh well, they deserve a time off, But yeah, uh, I think we did a pretty good job, I would say.
Yeah, nobody came on and pulled us off and had to intervene. And we filled up a
Yeah.
whole hour. Last week, me and Mark cooked
Yes.
through this thing in, I think, 30 minutes.
I can't believe I actually really enjoyed last week. You and Mark. I mean, I love the way that you're like a silent assassin, like killing people. Well, are we supposed to keep finding words? I'm not
We're
sure.
close enough. We can probably wrap it up and jump over to Discord before everybody takes off.
Yeah, but what are your final thoughts on the stuff?
Just remember there's a lot of landmines out there. No, none of these trends have been easy. After we hit that bottom in October, it's been just one minefield after another. So be careful.
Yeah, I think swing trades are particularly hard. I don't know if it's just me or in general. The trends are like easily broken, and it's very hard to sustain the trend. So well, we will see. We will see. It 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 was a it, it it was a quiet week in general. I think up to now. So we'll see what happens.
Yeah, next week we'll have some
Yeah.
fireworks. Friday we have that report coming out, and then I think the next report's on Wednesday. So Monday, yeah, the first half of next week we'll have quite a bit of action.
Yep. 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 I think we will have a lot more stuff to talk about and picks to choose from. Yep. Good for me.
All right, another great show. I'll see you next week, Tom.
All right. See you. Thanks, guys.